Hi everyone, I'm Alkis CFA. I'm an Executive Director and Head of Portfolio Management at an alternative investment fund management company called Resolute Investment Management. Before I start answering the questions that I've got in front of me, I thought it would be a good idea to give you a brief overview of how I got here and what my path was. So, whilst I was at school, I followed a pretty basic path at the time, which was either a business or a science path, and I selected lessons such as accounting, which I was pretty good at. I did O-level and A-level accounting, excelled in them, did the accompanying LCCI exams, and so when I completed school, an accounting and finance degree seemed to be the best option for me. I went to the University of East Anglia, where I got a 2-1 in accounting and finance, and then subsequently joined PwC, which is a professional services firm, as you know, as an auditor, studying on a ACA career path. I was an auditor for about close to 4 years. I found the job quite interesting, but it wasn't really something I wanted to do for the rest of my life. And so upon completion of my ACA, I was headhunted and joined the family office of a high net worth individual, where I thought I'd try my luck as a financial controller, basically moving from reviewing accounts to preparing accounts and transactions. Whilst working for the family office, I was involved more on the investment side, and I started liking it. So I was involved planning, first of all, from a tax perspective. Does a transaction make sense? Does it not make sense? What is the impact of this transaction? Will we pay a lot of tax, or is there a way to structure it using available tax laws to ensure that we minimize the tax leakage of a particular investment? Secondly, I was more involved with the group chief investment officer, and so I started seeing how financial models were working and how one values a company, or how in order to execute a transaction you might need to utilize existing funds or take a loan. If the bank doesn't have enough money to give you a loan, the given currency that you wanted, maybe you need to be a bit more creative. Maybe you can take a loan in a different currency and use a swap transaction. So I was involved in that. I got really enthused by the whole investment landscape, and so I decided I wanted to do the CFA. Well, prior to deciding, I had an offer, and I joined an up-and-coming fund management company as a director there, utilizing my business knowledge from running, basically being initially the financial controller and later the CFO of the family office. So the business knowledge I'd acquired through that, and the investment knowledge I've acquired through that, into this new burgeoning business, which gradually came through Cyprus. And so I became an executive director, part of the investment committee, was very much involved in how investments were structured, how acquisitions took place, how disposals took place, being part of the active, let's say, discussion with the portfolio manager and the risk manager, and helping ensure that these transactions took place. So whilst at the fund manager, one of my colleagues very helpfully said, well, why don't we do the CFA? We're both accountants, and we understand most things. And it was true. I'd go into meetings, probably understand 70-80% of the terminology or business rationale going on. And I agreed, perhaps rather hastily, but not a decision I regret, to sign up to the CFA when I got home at night. the interesting thing here is that when I decided, I was also the father of a newborn baby boy who was roughly about 2 months old. So I didn't really factor in how much commitment and how much work I'd have to put in to getting this qualification done. So over the course of the years, I continued my day-to-day job, continued my day-to-day duties as a father, as a husband, as a friend, as a son, that duties everyone has in their day-to-day lives. Duties to myself, trying to keep fit or pursuing any other interests I had, tagged along with the excellent responsibility of studying for CFA exams, which back then were annual in Cyprus, at least once every summer. I mean, some people could do level 1, I guess, in the UK, but I never did. So, and I finally obtained my charter in 2019, which coincided with my departure from the fund manager that I was at, and subsequently a small stint at an investment advisory firm where I was very much responsible for reviews of business plans, structuring of funds, and assessing investments into venture capital, assessing potential renewable asset investments, solar and wind power, both in Cyprus and overseas. But whilst I did enjoy the job, I had decided I wanted to move on from the firm that I was at, and I received an offer to come and join Resolute, where since 2019 or 2020 officially, when we were officially licensed, I have been one of the 2 executive directors, a pair of the so-called 4 eyes of the company, 2 people, 4 eyes, who oversee the day-to-day running of the company. And as I said, Resolute Investment Management is an alternative investment fund manager. We specialize in investment into real estate and real estate related strategies, and additionally private equity, which are the 2 areas which I also pretty much cut my teeth in the family office and the first fund manager that I worked in. So a bit about that then. That's who I am and how I got here. I will now answer a few questions as to some day-to-day responsibilities and a number of other things that CFA Society Cyprus have very carefully put together a list of. Okay, now on to the questions. Right, so here's the first question. Can you provide an overview of your role as CEO of the company and as a portfolio manager? What does your typical day look like? So, first of all, as mentioned, an executive director is responsible for the day-to-day running of the fund manager, the alternative investment fund manager. That means you oversee all functions, whether they are prepared in-house or whether they're delegated to other professionals. What are the functions of a fund manager? Right, so a fund manager has portfolio management, has a risk management function, has an AML compliance function, a regulatory compliance function, internal audit, valuation, fund administration, and so-called back office, which is in essence the accounting, the HR, and the legal. I am required to understand what each of these functions does, to set procedures for these functions, and to ensure that those procedures remain up to date, and also that they are executed in line with our procedures manual. In addition to that, I'm also responsible for ensuring a number of day-to-day things occur correctly. So that is whether it's reporting to the regulator in both an accurate and timely fashion, or whether it's, for example, speaking just to the finance department and making sure that things are running smoothly. Are we still on budget? Are we recovering our receivables from our clients? Are we, how are we doing on cash flows and things like that? These are all part of the day-to-day duties of being a director. Furthermore, as a director, you're responsible for setting the strategy of a company. So, in essence, when you're creating a business plan, we're going to focus on a certain amount of areas, and you'll do this over a specific time frame, a couple of years, 3 years, depending on what it is, and then actually delivering that business plan. Furthermore, being the specific director that is responsible for business development, a lot of my time goes into speaking with clients or prospective clients, and that is to develop and maintain relationships. Also, it is sometimes resolving occasional problems or answering particular questions regarding, the management of funds or potential issues which may arise, transactions, requests for redemptions or subscriptions and things like that. There's a lot of day-to-day communication with clients and prospective clients, and clients could be investors, it could be funds which have appointed us as fund manager. It's an endless list, and you need to make sure, basically, as a director of a company, that your stakeholders, and that stakeholders include clients, include counterparties you do business with, include your colleagues, your staff, basically. It includes, the regulators. You need to keep all these people happy. Furthermore, I've got my role as head of portfolio management. So at Resolute Investment Management, we manage roughly about 400 million euros worth in net assets under management. Our strategies are predominantly illiquid, so it's real estate, private equity, and some other illiquid strategies, and that involves overseeing, or my role rather, includes overseeing that each fund is executing its investment strategy in line with the prospectus. Prospectus, in case you don't know what a prospectus is basically the document which outlines what the risk and the return of a particular fund is and what its investment strategy will be focusing on. So the rationale of why someone subscribes, and an investor subscribes to a fund, so they give their money to you to execute the strategies outlined in the prospectus, with the hope that you will generate the returns that you've been given. So it's very much, monitoring the investment strategies. Furthermore, because our funds are illiquid, they're not valued on a day-to-day basis. Of course, it's like the value of real estate changes over time, but it doesn't typically change from one day to the next. It's not like a stock which is day traded. And the same for private equity. These are typically illiquid things which are valued normally on an annual basis, unless you're constructing an asset or unless you've injected some additional cash in, where there's certain milestones whereby these things are revalued. So what does my day-to-day look like from a portfolio management perspective? Well, first of all, it's monitoring markets, where the underlying investments are in them. Markets could be market reports, could be news, could be a number of other areas where I receive information from on the particular markets and on particular asset classes that we're investing into. There's periodic calls, with asset managers or the responsible person in the local country. So we invest in a number of different countries, but I'll give you an example of Greece, where we invest in real estate projects, and you can oversee an investment strategy. You can set it, you can oversee it from Cyprus, but you need boots on the ground, and so we appoint real estate asset managers who do the day-to-day necessary tasks for our investment strategies to be executed, whether it is redevelopment of a project or whether it is simply just monitoring whether the tenants are paying or not. So it depends on what the investment strategy is, whether it's something where you're just simply investing for a long-term yield, which is in real estate is known as core investing, or whether you are doing so-called value add investing, which is, buying something, turning it around with the target of increasing its value before sale. Next, it's also monitoring cash flows. So when we select investments, we typically set certain business plans. So if we're redeveloping a particular asset, let's say a real estate asset in Greece, I'll use this example again, in Greece, there might be a business plan. So, or there will be a business plan rather, and the business plan will set out how investments will be made and how often you will call down capital from the fund to the asset, and to whom it will be paid, and we'll monitor that these things are being done correctly, just to ensure the safeguarding of investors. And finally, in the case where we have delegated the task to an external third party, or whether it's one of our colleagues at Resolute Group who is executing the task, I will monitor the performance or from the asset manager's report, or I will monitor the portfolio manager's reports. And these are typically less frequent. Maybe they might be monthly or quarterly, depending on the type of asset. Those are some of the day-to-day tasks. But being portfolio manager, or head of portfolio management rather, involves setting strategies for a number of funds. And that includes identifying investment opportunities for new and existing funds, and referring them to the investment committee for discussion and subsequent, hopefully, approval. An investment committee typically includes the portfolio managers of the company. It includes the risk managers of the company, and anyone else who's an expert who's been deemed as the person you want to be discussing with when you're assessing an investment. Second of all, it's structuring investments in a manner that is both efficient from a tax and legal perspective. So you always have to keep in mind where are the assets located, and where are investors located, and is it best, to set up a fund in Cyprus with a special purpose vehicle, a company, let's say, in Greece to invest into Greece, or is it better to set up a fund in Greece to invest in Greece? Same could be, do I set up a fund in the Cayman Islands when, let's say, none of the EU investors would typically choose the Cayman Islands as a location to have a fund? Good location for US investors, but not so much for EU investors. So there's a lot of discussions and considerations. What are people comfortable with? Because if you don't have a vehicle that is tax efficient, and you don't have a vehicle which is typically in line with the preferences or the legal preferences of your investors, you're either going to have something which is performing subpar, or something that no one's subscribing to. Next is discussing, creating, or overseeing the creation of financial models. So we use Excel, and we'll create financial models which will outline potential cash flows and target returns of a fund investing into an asset or a number of different assets, and you will show these returns in line with a number of different scenarios. What's best case scenarios, what's the base case scenario, what's the worst case scenario. What if we have excess cash? How does that cash create a drag on the returns of the fund? And maybe there's something else that we can invest in in the short term to make sure that money is working for us and not just reducing the returns. There's a number of things that come out from the financial model, and ultimately this is what you will show your investor, the target returns that you have. There's no such thing as guaranteed, it's always target returns, and they will assess whether or not they believe that you can execute that, and whether or not they want you to manage their money for them in this investment strategy. Furthermore, we'll review candidate providers, so asset managers, fund administrators, depositories, annuers. It depends on what the need is, and we'll appoint them or not appoint them. We'll review target assets and see whether or not they meet our preset criteria. So, for example, if I'm investing in flats, for example, that I want to turn around, maybe I've got a couple of criteria. Maybe I want it to be 2 bedrooms or 1 bedroom. at most. Perhaps a potential target asset size might be value rather would be 200,000 euros at most. Anything that exceeds that would be immediately rejected. Once all of this is created, you oversee the marketing material that's done prior to sending it to the regulatory compliance for sign off. And then once you have your marketing material ready and you're painting the story that you want the investor to assess, you will then speak to investors to try and raise capital and explain the risk, return, and rationale of your investment. Okay, how do you balance your duties as CEO and portfolio manager, and what are the main challenges you face on each side? Well, I think this is a bit of a personal question rather than something which relates to CFA, but I'm happy to answer it. And I'll say that I balance my responsibilities by booking time. So typically, I'll use my Outlook calendar and I'll block off time that I want to focus on specific things, whether it's between meetings. So if I've got a meeting at 2 and a meeting at 4, maybe I'll block off an hour in between so I can get some work done. I'm quite methodical with this. When I'm arranging meetings, I typically arrange them in the afternoon when I'm more tired, and I'll focus my mornings more on being productive, literally executing tasks that I've had. Furthermore, another thing I do is I split my tasks depending on how important they are. So an important and an urgent task will be done first. A less important and less urgent task will either be delegated or will be left on the pending list until I've got time to get to it. Then I've got a question now, moving on, and this is career advancement and opportunities. What are the key skills or qualifications? Which key skills or qualifications have been instrumental in advancing your career within the financial industry? Well, of course, CFA has been instrumental, but I'll focus on a number of key skills. Financial reporting and analysis, definitely one of them. I mentioned earlier I'm a qualified accountant, so I've got a very strong accounting background, financial reporting background, but the CFA helped me better understand what the preparer of financial statements might be trying to tell you, and whether he's trying to guide you down a specific path or not. And basically, it helped me draw back the veil from what the board wants to present to you, and to try and better assess in more depth what a set of financial statements is telling me. And this has helped me in the past because I've done a lot of private equity investments, and you need to really understand what the value of the company is, and also helps when you're reviewing listed financial instruments, because what are the financial results telling you? Do I need to add something back? Do I need to subtract something? Is there something recurring or something which is extraordinary? All of these things are really important, and financial analysis is super important in the financial industry. Second, I'd say professional ethics, understanding that the client's interest should always be paramount. So it's important to understand that by keeping your clients happy, your business will do well. And by acting ethically, you put your client's interests first, your company's second, your own last. And that really helped me basically focus, being more client focused, and this has helped me develop better origination skills and better business development skills. Portfolio management skills, obviously, understanding how to create a portfolio with a diverse range of assets with different characteristics, and each of them performing differently under certain scenarios, which ensures that you reduce your risk and enhance overall return. Corporate governance is another one. I think very important when the more senior you become, because different companies work in different ways, and that's why it's important to have effective procedures in place to ensure that you've got the right checks and balances to ensure that all tasks are done effectively. There's a saying, not to get too philosophical, but there's a saying which says a fish rots from the head. So it's the same for organizations. You need to focus on corporate governance to ensure that your business stays fresh. And what do I mean by that? It means that your business is run smoothly, correctly, and in line with all prevailing legislations. Finally, of course, alternative investments. alternative investment skills have really helped me, because I've really, as I mentioned earlier, I cut my teeth in the investment business in the alternative investment field. So that's assessing performance of alternative investments such as real estate and private equity, and under which factors you consider when assessing a particular business, a particular type of business in a specific sector, or in valuations. A good example of valuations is private equity. It's not too different from listed equities, but you need to be slightly more thorough, and you'll probably use a blended method, and you'll combine values derived from discounted cash flows, or from ratio analysis, or from comparable transactions, and you'll come to a blended, weighted average price. And that helps you when you're going to make a bid to buy a company, or whether you already have made an investment. Do I hold it? Do I sell it? There's certain time frames and things like that. What advice would you give those aspiring to reach executive levels like your own in terms of career development? Well, being an executive requires a diverse skill set, which you build over your career. Early in your career, you need to focus on your technical skills. You really need to be solid technically, because people who are technically solid stand out, and therefore are the people most likely to get promoted. Soft skills are also important. Learn to network with your peers, seek advice from those further along in your professional journey, work well in a team. All of these things are skills that you need to learn early. In the middle stage of your career, you need to hone your leadership skills, managing your teams effectively to deliver, and also to make sure that relationships between team members and yourself, or team members between each other, remain well. Managing a team and individuals delivers results, but it also helps junior team members grow. And if you're a good leader, your juniors will grow and grow into good leaders themselves. So it's super important that you pass on knowledge and you pass on ethical skills to younger team members. At this stage as well, during the middle of your career, you need to really be more involved in client and business development. Those who sell will always be valuable to an organisation. In the latter stages of your career, you need to focus on understanding how proper corporate governance works, understanding more about business strategies, and of course, you need to keep hammering home those sales skills, because people who sell typically do reach the top of the ladder. So super important. Okay, now let's move on to an overview of the job market here in Cyprus. Got a couple more questions left. So how would you describe the current job market for financial professionals in Cyprus, particularly in the investment management and portfolio management industries? Right, well, the job market in Cyprus is quite competitive. Investment management roles are not that prevalent on liquid assets like public equities, fixed income and derivatives, but more focused on illiquid assets such as real estate or non-performing loans, both of which are experiencing the highest growth and demand. This might change over time, of course, but as the number of investment managers focused on liquid assets increases. But given the current landscape, I'd say a strong professional qualification which focuses on diverse knowledge base will help you switch jobs easily amongst the current field of prospective hiring companies, and future fields. And what's a strong and diverse qualification? Well, the CFA Charter. How do you see demand for CFA charter holders in Cyprus, and do you think it offers a competitive edge in the local market? Well, I'd say definitely demand for CFA charter holders has increased over the years. When I began my CFA journey, which again was not that long ago, most people say, well, I don't know much about the CFA, but I know it's really hard. Well, it's true, it is a pretty hard qualification. It is an achievable qualification if you put in the time and an effort to pass. In recent years, our society has done an excellent job at promoting the CFA designation. The visibility of the designation has increased dramatically amongst industry participants. You see the words CFA will be considered a benefit on many applications, or an advantage on many applications. And I can speak personally to the two most recent senior hires that I've hired at Resolute Investment Management are both CFA charter holders. Finally, what advice would you give CFA candidates or recent charter holders looking to enter the financial industry in Cyprus? Well, first of all, seek internships, paid or unpaid, at firms in the area that you wish to be in. The CFA charter or any other professional qualification is a fantastic thing to have, but without experience, it's not worth very much. You need to make sure that you start building up your experience ASAP. Finally, just network and reach out to people. Don't be afraid to interact with people on LinkedIn. Don't be afraid to interact with people at public events. If there's one thing that you should know, you'd be surprised at how helpful some people can be if you reach out to them. So, hope I haven't kept this too long, although I probably have. Either way, I hope I've given you something to think about, and that those of you who wish to follow the CFA path or the investment management path in general do follow on with your dreams and succeed. Thank you very much.